Join me now, everybody, for the 4 big reasons to not invest in real estate. Okay, I know this is a little odd for a YouTube personal finance guru because we're typically supposed to tell you all the great ways that one is supposed to invest in real estate in order to make fabulous amounts of money and have poolside parties and Lambos and that kind of lifestyle. Well, there's also a reality to investing in real estate. And I thought the time to talk about it was now because it's a really tricky time to invest in real estate. Number one, interest rates are pretty high now. Historically, they're actually about average, but they're higher than what they used to be. Prices are pretty high. And in addition to that, extra things and maintenance and taxes and all that kind of that stuff is high. So all that's going to eat into your profits. So I'm going to go into the big 4 reasons why a person should not invest in individual real estate deals. Now, I want to separate this from real estate investment trusts. I'm a big fan of REITs, REITSs. So real estate investment trusts are set up like you can buy shares of them on the stock market, and they're companies that hold a vast portfolio of various types of real estate. And a lot of them tend to focus into certain types of sectors like retail or hospitality or gaming or industrial properties like, Amazon warehouse type things. Or some of them do cell towers. Some of them do healthcare facilities, really anything you can think of. And then others are just a diversified collection of various properties. But the neat thing about them is that 90% of their profits have to go back to the shareholders in the form of dividends by law. That's what gives them certain tax advantages. Anyway, so those can be pretty neat and a good way to gain exposure, in my opinion, to the real estate sector. What I'm talking about, though, for purposes of this video is when we are personally owning and operating real estate as a type of small business. And don't get me wrong, a person doesn't have to think about it as a small business because it's not always a passive investment. On YouTube, it's talked a lot about as a big passive investment thing. And yes, there are times that it can be more passive when things are going well and there's not a lot of maintenance problems and you have your real estate fully fully loaded with tenants. You're doing pretty well, but that's not always the case. There are times when it's not like that. So here we're going to go into it. Reasons not to invest in real estate, and it's not always a big party. So the first thing I want to mention, I have about 20 plus years of investing in real estate experience. So I just want to let people know that I know a little bit of what I'm talking about here, and I've seen the ups and downs. And I've seen the good times and the challenging times. And some of these YouTubers, I think they'll do anything for likes or subscribers. And I think that's part of the issue here is that a lot of it's clickbait, get rich quick with real estate. So here's one thing to talk about right off the bat. I've found in general that about half of profits are automatically eaten up, or at least eaten up over time, by maintenance, capital improvements, keeping the places up and running. All those costs really add up. And I think a lot of that takes away from profits. So that's one thing to calculate if you are considering investing in real estate. Isn't it passive, they say? No, real estate's not always passive. If you're not fixing and managing things, then you're paying someone else to do it. Sure, it typically does not involve going into an office each day unless you own like 50 units. But it's not necessarily passive all the time. There are times when it can be beyond stressful to manage physical real estate. Taxes, tenants, people, repairs, contracts, and more. So those are some reasons right off the bat. Now, this is coming from a real estate guy. We have videos up in terms of are you ready to invest in real estate? That's one of them here. Are you prepared for real estate investing? And I have videos and blog posts about the advantages of doing so. And there can be advantages. I've just found that it's a long-term thing, but it does take a certain set of skills and temperament. So here's some reasons maybe not to do it. So number one, it's capital intensive. So you tie up a lot of capital by investing in real estate typically. Most of the time, banks won't lend you all the money to go buy an investment property. A lot of times you have to put 20, 25, 30% down, depending on the situation, depending on your situation, depending on your assets, depending on the location, etc. So you have to think about that. That's a lot of capital that is tied up in a physical asset. Now, physical assets are not easy to sell at times. There's friction to selling. It's not like, it's not like having your, where's my cell phone? It's not like having your cell phone and swiping a button and being able to sell your stake quickly. It doesn't happen like that. It takes a long time to get the cash out of there. So the second thing to consider is market volatility. Yes, the real estate tends to go up over time, but it's very market dependent. And even within markets, there's subsectors and sub areas that have to be looked at. There are times when real estate goes down, and we've seen it in recent years, maybe not totally recent anymore, but about 2007, 2008, there was a huge market correction with real estate. Things had been way inflated up. Just about now, things over the pandemic years have surpassed those levels, but it took a long time, maybe 13 years. Real estate takes complex decision making. Real estate investing involves complex decision making processes. You need to consider factors such as location, property condition, potential rental income, financing options, market trends, and legal regulations. Analyzing and assessing these factors accurately requires knowledge, experience, and thorough research. Additionally, managing properties, dealing with tenants, and understanding tax implications can further complicate the process. It's not always a simple thing. Again, the internet and the YouTube gurus are going to want to make it sound like, you just go plunk down some money, buy something, and you start cash flowing millions of dollars a year. It doesn't always work that way. So as I mentioned before, there can be massive maintenance issues. Over half of profits, I think, will go back into trying to maintain the property. You have to think of it. It's a physical thing that's constantly being hit by the elements, and it's being used by people. That means things are breaking, and things will break. You can definitely count on it. So if you go to truewealth.moneyvikings.com, you'll see plenty of articles about this. And on our YouTube page, you'll also see some videos. This is one that we did about real estate investment trusts, and talks about some of the advantages of those. REITs, 90% back to shareholders, diversification. It's a time-tested asset class, no property management functions, no dealing with tenants, and no complicated loan process. So there's some good advantages there. This is why Warren Buffett never buys properties, so you could take it from him as well. So anyway, just keep all this in mind as you're making your investment decisions on your True Wealth journey. Thank you very much, everyone, for watching. Have a great day. Please like and subscribe. I'd really appreciate it, and we'll see you on the next one.